Average hourly earnings, they're looking at point 0.2. I'm thinking the same thing about an average, a gain of about point 0.2, which is really what I think that's going to go on and play out. The point 0.2. I've seen some people. I forgot. I think it was Citi who was looking for only a 0.1 growth, and I'm not. I saw some other estimates, but I just didn't pay that much attention to them. And let's see. Later on, we have durable goods and factory orders. But obviously, the main driver is going to be non-farm payroll. And as I said, from what I've seen, most of the estimates are right around this 210 area. So they're looking for just a very minor beat. I mean, overall, I've seen across the board right around 210, maybe on the high side about 220, but just here at this price, or actually, I should say this number. I think it'll come in a little bit stronger than what people expect. So as I said, I'm looking for. I think I posted like 242K for my guess, or 241K. So I expect it to come in just a little bit stronger. But we'll go on and take a look at, more importantly, is how you want to, how I believe, it's the best way to go on and try and look at the NFP as opposed to a specific guess. And what I'm saying that as far as betting on, or not betting, but which essentially it is at, but I'm saying is as opposed to, putting your flag in the ground and saying it's going to do this or going to market. Surprisingly, the internet's responding pretty well, decently. Considering, like I said, as I mentioned, the internet's down. I'm just using my iPad as a hotspot. I wasn't even gonna. I was thinking about not even running the Reuters news, because since I'm running, the charting, I didn't want to go on and pull on the internet. But we're going to move into the charts. Hope the tent doesn't come down. So here we are on the euro. If you saw my post yesterday, we were making that run, and that's why I think it's important to always key in. Obviously, NFP day is huge, but I always think it's important to go in and key in what economic data is coming, because the market will tend to push in that direction. Good example was yesterday. We were starting to move higher, and I thought that they would make it up into the 1190s, because that's what we had, 1191. I tweeted that out when we got there. 1191 was at 38%, and 1195, we can look on the 30-minute, but 1195 was a key level. So I thought we'd make it there for sure. We did make it. And then ahead of the data, which was, that was ISM. And I thought that, the market was going to go on and believe, hey, chances are, on the backdrop of all this China crap, that it'll probably come in a little bit weaker. So I was thinking, they're probably going to push them above 12. And treated that on the inside call. Hey, look for them to push it on a week ISM above 12. At first they didn't do it, and then they got above the 12 right after the report. I mean, at first, when on the release of the report, they only made it to like 1198. They backed down to like about 1190, and then they made that push above 12. And I mentioned, I go, hey, 1212 is the short-term bias pivot. So this is where I was coming up with this. And all we're doing is working lower. I know people are having their own technical analysis as to why and this and that. Look, the NFP is coming out. The number is going to be, or is considered to be, positive. What they do is they hold them here hostage, and then as we come into the number, anybody who, in this case, is long euro, is saying, well, I'll try and hold it, but I definitely don't want to necessarily be long euro ahead of the NFP. So then the market drips lower. I mean, I hate to burst anyone's bubble, but that's really the way the game works. So, like I said, it'd be kind of funny if here we are coming into, which is probably going to be an okay, nice, decent NFP number, and here's euro rallying. That doesn't make a whole lot of sense. So that's what I'm saying is up in here, these are decent areas to go in and fade the market coming in here on the idea that coming into NFP, they're going to go on the offer, and then, it depends on where you want to try and step in and cover them. I mean, I wouldn't be surprised by the time NFP rolls around, we're sliding right through this 1150. That's what just the way the game's played. Like I said, I don't have any positions now. I did go in and scalp yesterday against this level. I traded into the euro, traded dollar CAD, dipped my hands into the crude oil market. But like I said, usually I like to go in and keep it tight and go for the reaction. On NFP day. I used to go in and take bets going into NFP day, and even if I guess the overall perspective of the market, it ended up getting jiggled around, and I found out that, I'd rather just go in and wait, which quite often I'll do that. I'm probably not going to do that today now that I don't have my internet's down. I'm doing it on my hotspot. Is that sometimes what I'll do is I'll step in and I'll trade the number as soon as it's released and try and trade in and out of it back and forth scalping. I'm not going to go and do that this morning unless my internet comes back up. But I think what we'll do is, like I said, we need to go and take a look at what are the directions on where the market can go on a good number and on a bad number. I think that's more important. That's the perspective that I think you need to have across the board in these markets. Because the volatility, I mean, obviously for seasoned traders, I'm not telling them anything new that they don't already know. But for some newer traders, they might be thinking, okay, we've got support here at 1150, 1140. They'll wiggle you out of those positions faster than you can. Your head will be spinning around like the girl on The Exorcist. Because that's how the volatility is during NFP day. So what you're really looking for, try to get this out a little bit, is how far can they go on and break them. What's going to be key is going to be this 1087, which is going to be there's going to be a level there at 1087, and 1087 is a 50% of the low back at the end of March, 462. As I said, it was pretty wild and volatile back then, so some people might have 450, some people might have 465. I mean, it was pretty volatile back then. I remember they hit this low in the Asian session at the time. It looked like, people were talking about, going to parity and all this other stuff. So, but basically, a few pips isn't going to make a difference. So here's this 1087. I think that's going to be fairly key. But, on NFP day, they can fly through that quite quickly. But 1070 is a more pronounced level. They're not going to stop on a dime right here at the fib, but you can see where they might, after they overshoot a little bit the market, if it were, to go and hold itself steady And then you could look, then at that point you can take your bets and say, I think this area is going to go on hold. They could work higher. On NFP day or any big, huge report, and I'm really focusing that towards, explain this towards newer traders, is that you can easily overshoot. Someone might be thinking, okay, well, 1070, that's going to be a great area, or 1087, I'm going to be buying right there. And then it shoots all the way over here, goes through 1050, maybe even towards 1030, 36, and the person's like, oh man, screw that. That was BS. That area was never going to go on hold. That was a bunch of crap. And then within the first hour, we're already back here testing 1115. And then, so you may or may not have, let's say you bought 1087 right on the button, and you're thinking, okay, I'm here, I bought 1087, and you see it getting past 1050, and you go, you know what, I'm out the door. They're going out past 1050. And so you go on and go market, and you get knocked out at 1042. Maybe they dip it down to 1037, and then by the close of that hour, we're already here at 1112, and you're pissed like crazy because you feel like you got screwed. Look, you're going to have to factor in that the volatility that you're going to go and see here on NFP day. So what you want to do is you want to have your levels and fibs. And like I said, this is more guaranteed, not guaranteed. This is more, I'm trying to present this more toward the newer trader. The seasoned traders already know that. But I hate to see these newer traders get their pockets cleaned and really get discouraged, on a day like this, and then maybe see the euro come back and they're thinking, shit, I bought it at 1087, it looked like there was a fib, dude goes and says there's a level, it drops all the way to 1050, I get out at 1044 or 1042 on the market, and I'll be damned if the damn thing's not up here at 1130 and everybody's talking about a bottom put in place. This is all BS. Well, like I said, you're going to have to allow for that volatility on non-farm payroll day. So, this 1087 is going to be key, but it's key. Don't forget, this is a 2-hour chart. So it's going to be key for this area of 1070-ish, but we did have a fib there, to hold overall on a 2-hour closing basis. But in the meantime, on NFP, where the market's going to swing, crazy, like a monkey on a swing, it's going to go on and it's really going to go on and push these levels here. So on the downside, what you're looking at and I think this would be a bit of an extreme here, well, not an extreme, but where you would find the market to go and bounce. I don't expect that the market's going to turn around and go all the way down here, but I mean, if we start to work lower, then as we come into, let's say, Monday or Tuesday, if that was the case, then I would expect to be a lot of support here in this 110, which 1008 would be the 78% of the recent swing low of 807 to the recent swing high at 1703. I would expect the market to shoot beyond that and hit some stops and maybe even get to 950. But that's looking further out. But for NFP day, you want to kind of sit back and have these levels in front of you. You don't really want to worry about 1115 because even if the number, let's say the number comes in at, I don't know, like let's say 203, 208, and we come down here, let's say to only 1128, and then we jump up to 1150. It's so volatile, there's a pretty good chance that they'll probably come down here and test the 1115, where the low is 1128, let's say just a few minutes ago, and gun some stops, test the 111 even, and now we're making a run right back up here. So I'm just saying that's the way the action goes and plays out on NFP day. And you really have to go on and be cognizant of that and be, I mean, it's serious when I say be cognizant, just have a general understanding is, okay, I know the way these guys are going to play this game. Don't go by what is the first level, unless you're scalping. If you're a pretty good scalper, you can go on and play that game. I play pretty good. I mean, I play it. I would have to say, I'd probably say I think I'd give myself, I think I'm an excellent scalper. I'm not going to be playing that scalping game as long as my damn internet's down, and I'm using my iPad as a as a hotspot. But I could see, like on a number like, let's say 203, we dip them down here. maybe we come down, and we can shoot easily past this 11.15, but I'm just giving an example. They dip them down to 11.20, the market pops back up to like 11.60, we come back down, we blow through 11.15 then, test some stops, get past 111 to see what stops are there. Maybe we do make it dip in here to this, towards this upper 80s, and then we start scooting back up. And so that's what I'm saying. You have to go on and have, you really want to basically back, instead of having a more focused look like this, and you're thinking, okay, let's see, where's the support here. Look, it's NFP day. It's going to be volatile as F. So you need to back out and get a broader perspective, because generally the NFP, to a certain extent, will set the tone of the market looking out. Because then people start to factor in, hey, where are we going? What's the possibility of a rate hike in October? Obviously not very likely, but how about one in December? Are things really going to finally start to tilt and break down for the euro? A lot of things, I mean, I'm saying, so you want to, you know, what I would recommend, unless you're just a pretty doggone good scalper, or unless the wheels fall off the caboose, and, you know, we really take a big, huge move down here, and you say, you know what, I'm buying 110 even. I don't give a rat's you know what. I'm buying that level. I'm happy with that level. Other than something like this, where we saw something huge, like let's say we saw 278, which is probably going to turn the euro very negative, and we make this run down here towards 110, you could probably overshoot it maybe down to 984, and then you'd see a pretty big bounce to like maybe towards, you know, 1040, and then see the market reassert itself lower, and then maybe it finishes the day much stronger lower, because there'll be that implication that, you know what, October could be on the table. Meaning and once again, I'm directing this more towards newer traders. October being the October FOMC, that maybe the Fed could be pressured to go in and raise rates. And what would happen is if you saw something like really strong, like 260s, in the 260s, 270s, then you would, then the market would be, you would see all the headlines saying the Fed made a mistake, they should have never gone and not hiked in September. They're, you know, we're ready to go, blah, 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 and all this other stuff. And so then the market would have to price that in. And if they did go in and price that in, I'm thinking, how much sooner before you get to see a rate hike? Could we even see one in December? If we don't see one in December, we're definitely going to see one in, let's say, March or whatever. And then the thought of the interest rates gets pushed forward, and then with the idea that the ECB is going to continue to do QE, and they're probably looking to expand their QE program, then that's just going to go and push the euro and really put the euro on a downward path. But I'm saying a lot of things are going to get turned around here and there based on, you know, how this NFP report comes. I don't think it's going to have such a big impact, because I think it's really they're going to go raise it December. That scenario, what I was just describing, is something if we got something in the 260s, 260s, 270s. What's going to weigh more on the report, though, is going to be the average hourly earnings. We looked over here on the Reuters poll, and they're looking for 0.2. Again, in 0.2. I'm looking for the same thing about 0.2. But if we got a 0.3, and let's say a job gain in the 250s, oh man, December would be, it's like a done deal, basically. That's it. At least that's the way the market would be pricing it, and that's as of today, and that's how you'd have to go and look at it. So that's where we stand, kind of, sort of speak, on the downside. Obviously, we had a good number, then you're going to be looking at these lower numbers. We don't have to go overboard at this time, but that's what you'd be looking. Now, what if the number were to disappoint? Let's say that the number comes in around, oh, I don't know, like let's say 189, and the job growth is, the average hourly earnings is only up 0.1. Then the market's going to look like, you know what, things are starting to run out of gas, and we're starting to see that this is really starting to go and impact the market. See, I mean, I'm talking about the crap from China and everything else along the globe. Well, then, what people are going to be talking about then, if we saw something like, maybe not 190, upper 190s, but let's say we saw something like 178, and job growth, average hourly earnings of only 0.1, then people are going to be talking about March. And then the euro will be able to go and rally. And we talked about this bias pivot before, this 1283. Once again, a 2-hour close above the bias pivot is going to go in and turn us, turn the market very positive. At that point, I have seen a lot of people talking about this 115. I think that's overdone. But on a subpar number, and I'm talking about something like 178 with job average hourly earnings of only 0.1, would definitely set us up to challenge 1455. And but the point being is, some people are going to say, well, what do you mean? Like, why is it all of a sudden just turn bullish? Because let's say for me that for the most part, I'm a euro bear. I mean, I'll play it from the long side, but I mean, obviously, I'm more apt to play the euro dollar from the short side. Well, for somebody like me who, let's say I'm even more bearish about euro, well, I'm not going to stand in front of a frickin' train and get my ass run over. Why the hell am I going to go in and short it? Let's say that the NFP number comes in like that, and we're already getting past 1283. Why the hell am I going to stand in front of the frickin' train at 113 and say, okay, it's going lower. I know that in months I don't give a crap about what's going to happen in a few months. So I'll say, you know what? I think the euro's still a little bit overdone. Yeah, the employment number came in weak. We're going to go on and, there's a little bit of this slowdown from all this China crap. But I think overall the economy will be fine. That being said, I'm not taking the other side of the frickin' trade until I let them, let the bulls have their day. You see what I'm saying? Let them have their party. And so my first guess is the first real test will be 1335. But ultimately, I think that they would make a run towards this 1455. Now, we'll have to just see how the number comes out. But obviously, if the number comes in subpar, like in the 170s with wage gains of only 0.1, that's going to turn things bullish in the short term. And your first real target is not going to be the 1283. That's going to set the bias going, but in all likelihood, they'll be able to blow past that. And if they can blow past that and these two tops here, that their first real test would be 1335, and you probably wouldn't have any real resistance until about 1365. And eventually they'll probably let them from a technical perspective come up here towards 1455. We'll just have to see how the number comes out. I personally think the number is going to come out a little bit stronger than what most people are thinking. I just think that we're going to get a little bit stronger number. Now, another thing we'll have to go in and factor in also is if the market breaks out. I'm not talking breaks out, but let's say we get a good number. And this is how you want to basically plan your trades, or to look at how the market, so you're prepped to think, okay, well, this would happen if this happens or that happens. So if we get a subpar number, and the market obviously gets past this 1212, then even from a technical standpoint, we'll be able to really launch up. This is what happened here on the way up towards 1283, and that's why I'll give you an example right in here. This is why I told people we're ultimately going to go work higher. We'll have to see what happens at 1283, and I told people I was concerned about this, and it wasn't on this one. It was here, right here. When we broke that level, I go, uh-oh, we're going higher. Someone was saying, oh, do you think it's going to go lower? Well, you think it's finished here? And this when it was breaking up here, and I said, hey, look, we've broken this trend line right here. I mean, I wasn't sure how far they could run them up. I knew the 1283 was going to be a problem here. But I go, they've broken this trend line. Now, it didn't last very long at all. But they broke the frickin' trend line. So from a technical standpoint, look, here's the deal. I was bearish the euro, okay? And I was scalping it. And I was looking at this trend line. I go, hey, when it breaks this trend line, I go, hey, you know what? Technically, the bulls have got it right now. You got to give it to them. So that's why I was not trying to step in. I think at this time, if I remember correctly, I did have a short, and then I was scalping here, and I ended up taking some here. But and I think this before Yellen. I think it was before Yellen. Anyway, like I said, so I was scalping around stuff like that. But I knew, you know what? The bulls have it in control right now. They broke the trend line. So getting back to where we are today, if we get a subpar number, or a number that's not as good as everybody thinks it ought to be, then if we get past this 1212, let me move this bar out. Remember yesterday, and I tweeted that, well, obviously I tweeted out first on the inside call, but I did go and tweet it out on my regular Twitter feed for people to participate when I said about, hey, look, you know, 1191 is a 38%, 1195 is a level, you know, 1212 is going to be your short-term bias pivot. So if the number comes in not so great, and they get past here, and they get past this 1212, not only will they have gotten past 1212, which I'm indicating is a short-term bias pivot. The real bias pivot is 1283, but my point was yesterday, it's a short-term bias pivot in the sense that it would turn things, you know, positive from a very short-term basis. If the number comes in a little bit subpar, obviously it comes in really weak, they're going to blow through and they're going to be heading up big time. But anyway, getting back to, I was just reading something real quickly. If the number comes in, let's say, you know, 188, which isn't so bad, it's just been a little bit below consensus. But the job growth only comes in at 0.1, but it comes at 188, which isn't really bad. And we start getting scooting, and we get above this 1212, which will turn it positive from a very short-term bias. We'll have also broken this trend line, and the market's going to want to go higher, and it's going to want to challenge 1283. Now, as I said, if we get something like in the low 170s, or let's say 169, and the job growth is only 0.1, or even worse, the job growth is flat, which I don't see that at all. Damn it, I don't mean the job growth, I mean the average hourly earnings is only 0.1, or worse yet, flat, then we're really going to launch. And that's why the average hourly earnings is going to be very key, because the Fed is looking for traction on wage growth. So anyway, that's what I wanted to show here on the euro. And I think not only just on the euro, obviously there's other pairs we need to look at, but I think it's more important to have your overall game plan. Now we can look at other markets to determine what we want to do. A good example is here on cable. But at least, even though I spent most of this time talking about euro, you have at least a general game plan or an outlook on how you want to look at these other markets. Say, okay, you know what, I need to look at the cable and how much further down can we go, and what would be my game plan, you know, in that particular, you know, circumstance. But at least you have a general idea how you want to approach the market is probably which really I'm trying to go on and share ahead of NFP, as opposed to this number, this fib, that fib. That's all good, but you have to kind of like know where you're going. It's kind of like with NFP, you're going into a dark room, and you might say, well, if I get this and I get that, but you know, if I'm telling you, hey, look, you're going to have to walk a little bit gingerly, because there's going to be a lot of things in your way. There's going to be a small little stool. There's also going to be a couple of things that you might trip or whatever. Then you're going to know, okay, I know what I want to do when I get and find these, whatever items, but at least I know that, I'm going to have to be very careful on walking. I have to take very short steps. and keep sure of my footing, because I could easily fall down on one of these things. And that's essentially what I'm trying to go on and provide, is what the outlook is, what are the numbers you're looking at, how you want to adjust your game plan, and then you go in and come in with whatever you're trading, whether it's euro, cable, dollar, yen, Aussie dollar, whatever. So let me take a look at. Yeah, Shirley says, just arrived and wondering about the yen. When you have the time, can you take a look at it? Yeah, we'll take a look at it. To be honest with you, I wasn't even sure if I was going to be able to do the webinar because my internet's down, but it looks like it's working okay. Not the internet. I'm actually using my iPad as a hotspot. So let's go and take a look at the dollar yen. And you know that we talked about this over the course of the week, saying, you know what, this thing has been trading and essentially 100 and let me see, I keep wanting to say 100, I don't know why that, but essentially a 200 pip trading range for just a little over 200, let's say a 220 pip trading range for over a month. Look, this dates back all the way to about 828. I mean, you did have one blip here above and one blip here below, but for the most part, the market has traded in a 220 pip trading range for over a month, for about nearly 6 weeks. Now, in the since Friday or so, we basically only traded in about less than 100 pip trading range. So the market's kind of all over the place. Now, the deal with the dollar yen, or with yen in general, is that it appears that we're probably heading for more QE at the end of this month, which is really what we were targeting. We've been talking about that for quite some time on this, and I think that I knew that they wouldn't take action in September. Some people thought that. I just didn't see that. But I think there's a pretty good chance. I won't even say a chance. I think it's pretty. I wouldn't say obvious, but it definitely looks like the scales are more than tilted in favor that they do action this later this month as far as QE. I'm kind of curious as to how that might play out. We could probably see a rally in dollar yen, but I bet ultimately ends up being faded. But that's for then, and that's not now. So what you want to look to is basically these two ranges right here. Not ranges, but these two levels within this range here. So it's all going to be about 1904. For the most part, they can go right past that. So it's really 1882. But essentially, what you want to look at 1904 and 2130. You want to write those things down, but just below that, you really want to maybe underline them. But what you're really looking for is beyond 1882 and beyond 2168. These are ones that you kind of want to have, like, you mark these in bold, but you mark 1882, which isn't that far away, about 22 pips away. And then 2130, but you mark more in bold, but you mark off this 2168. Obviously, 2182 is just right above, which is huge, okay? And you'd want to see how the market reacts when we get there, because I think that a lot of people, including myself, it just kind of shied away from the yen. It just, I mean, they had a big move yesterday, or was it day before yesterday? As the yen was taking off at the quarter end, going into the London close. But it's been doing a whole lot of nothing. Now, if you look at this, the dollar yen is rallying right here the same way the euro's selling off, because the dollar's rallying. It doesn't have to do with it has to do with the NFP and with the idea that we're going to go on and see a more favorable NFP. Whether it happens or not, the odds are that we would see a favorable NFP. So it's the dollar that's rallying, not the euro that's selling off. It's the dollar that's rallying. And so the dollar yen is very sensitive to U.S. economic numbers. So the dollar yen's rallying because the thought is that the NFP is going to be favorable. How favorable, we just don't know, but it should be decent. So I think that's important to look at, is to realize it's not so much the euro selling off, it's the dollar that's rallying. And the one pair that's more sensitive than any other to U.S. economic numbers. It's going to be the dollar yen. So getting back to the dollar yen, when you're looking, when it comes to NFP, you're not really going to be looking within these small ranges because they'll blow through these small ranges within the first 15 minutes. And I'm talking about not 25 pip ranges. I'm talking about, let's say, 75 pip ranges that within the first 15 minutes, they can just be up and down like that. And you're going, I'm short euro. I'm short the dollar yen. I'm putting my stop here at 20.69. They'll hit that number and then they'll be right back down here. And so you've taken a loss. And if you hung on, you'd be back in the money. The point is that my point, don't focus so much on these shorter time frames. I'm not saying the short time frame, but this shorter ranges. You have to, like I said, instead of being like this in NFP, you have to be like this. So what you're going to be looking at is 1904 and 2130, but you're really looking for a little bit more of the overshoots, 1882 and 2168. But I would be more apt to, if you're trading dollar yen, I would be more apt to just go in and wait it out. My thinking is, if you were trading dollar yen, if you want to scalp it, you're probably better off taking the other side against these two ranges right here, even if it overshoots a little bit, and let the market come back in. Because here's the deal. Let's say the number comes out good and everybody thinks dollar yen wants to go higher. Nobody's going to buy the dollar yen up here. Okay? If it comes up here, they're going to wait for it to pull back and get below 20.69, and then they'll start buying it as it pulls back. The same thing on the downside. If dollar yen breaks ultimately lower on a weaker number, nobody's going to be selling dollar yen down here. They're going to say, oh, okay, now I know I want to be short dollar yen. I'm going to wait for it to rally back towards this 119, and I'll short it there. That's what I'm saying. If you're like, I don't care, I want to play dollar yen, I don't care what you say, okay, then fine, that's fine. I'm just saying you just have your game plan in tow, how you want to go in and play this. So once again, within the context of what we expect overall from the NFP. So let's go and take a break now, and we'll cover any other pairs, but I think it's more important to have your overall game plan in tow as we come into NFP. So, and Shirley says, thanks. You're more than welcome, Shirley. Although I would probably wait for dollar yen, and we can see a little bit more clearly right here. But my guess is there aren't a lot of people trading dollar yen right now. So my guess is if it breaks up much higher. I will say this, with the idea that they're going to do additional QE at the end of October, that's probably going to put an underlying bid tone. And when I say that, really I mean on the dips, because people haven't been playing this for the most part. But if it does take off and everybody's like, you know what, it looks like it's going higher, then wait for it to pull back. You see what I'm saying? But if you were saying, no, dude, I trade dollar yen all day long, every day, I don't miss it, well, then I'd be saying you could probably fade this move above 2130 the same way you could fade the dip down here, because then the market will want to pull it back and then take that same side, but on a pullback. So you could probably, in all likelihood, fade the move here or towards here, let the market pull back, and everybody says, I want to be long, but I'll buy it back on a dip, and then we come back and test 2050, and then it starts to mount up. So if you were like, you know what, dude, I scalped like a mother, okay, then take that. That would be my recommendation. Although I'm saying if you wanted to just outright scalp it, my thinking is there hasn't been enough activity. Dollar yen has been a dog for the most part. So if you really think it's going to break out, then let it pull this move here. Let it come back in as people fade it back in, and then just try and pick it up on a dip. The same way on the opposite side, then try and pick it up on the fade on a pullback. But let's go and take a break, and we'll get back and we'll take a look at dollar CAD.